Well, we're coming toward the end of our trading session here on Election Day. And again, I'll remind you, I hope you do your civic duty. Get out there and vote vote your conscience. Do whatever you need to do, but please feel free to vote your conscience and do what makes you happy. Well, let's take a look at our market action as we get toward the end of our trading day, and corn is starting to lose a little more steam. Here we go. December corn down 6 3/4. Just a second ago, it was 7 lower. Right now, we're at $6.69 per bushel. We're only 2 ticks from our low of the day. On our quotes provided by Bar Chart, let's roll over to soybeans. Here we have January down 1.5 pennies. We're at 14.48 3/4. Now, again, in case you missed it earlier this morning, just wanted to remind you we had a batch of sales of corn and soybeans that were sold, roughly about 300,000 to 400,000 tons of each in total, and yet the markets are drifting lower anyway. Technically, that is not a very good sign. Now, let's take a look at what's going on in wheat. So we'll go to Chicago wheat here and look at this. December wheat down 13 3/4 at 8.32. That means we're 23 cents off of our high that we had last night. We're within 2 cents of our low of the day. Kansas City wheat on December down 7 at 9.50 1/4 here today. In the spring wheat market in Minneapolis, December is down 6 at 9.54 1/4. That's 18 cents off of its earlier low. And in the cotton market today, we had December still 66 points higher. It's avoiding the pressure from all the other grain contracts there. It's up 66 at 88.15 per pound. I'm joined by Brian Hoops, the president of Midwest Market Solutions, on this very auspicious election day. So let's talk about the market movement we're seeing today. Is it kind of a throwaway day because we have WASDE coming out tomorrow?
Well, good afternoon, Marlon. I don't know that we're throwing things away, but we are kind of positioning ahead of that report. The corn market closed on some technical support yesterday and is leaking below that now as trade is kind of getting prepared for the USDA to lower the export profile. I would say anywhere from 50 to 100 million bushels is certainly justified in this report. And we may see future reports even lower it even further. Plus, what happens if tomorrow USDA decides to increase yield potential? Then you see ending stocks really rebound. The trade guess is not very much of a change from last month. And that's where I think the surprise could lie, in the fact that maybe we see a yield increase and ending stocks increase much larger than what was expected. Soybeans, really no change in the yield as expected. And I don't think they make any significant changes to their balance sheets. It's going to be pretty much a quiet report. Wheat, I don't think they make many changes there either. But this wheat market certainly negative here going forward. And a lot of that has to do with the demand. The demand has been very poor for wheat, as it has been for corn. Egypt yesterday canceled a tender on the world market, citing too high of prices. And so when you're talking about markets that trying to find a price level that need to stimulate some demand, we're not at that level for wheat. And this market technically is in danger of really starting to turn into a downtrending market after being an uptrending market for at least the last 6 to 8 weeks.
You talked about the U.S. ending stocks or stockpile numbers. That will come out in the report tomorrow. In general, the trade looks like all the numbers will be a little bit higher than what we had a month ago. But if that's the case here in November, is that a trend that continues normally until the January report?
Yeah, it certainly is. In the December report, we won't have any updates as far as yield. We'll just have demand updates, and we probably will see slow demand trends going into December and into January, with the caveat being if it gets bad, adverse weather, hot and dry in South America, that's when we could see a big increase in exports, especially for corn. Some of these foreign buyers that have been wanting to buy corn out of Brazil and Argentina, or anticipating it anyway, are going to be forced to turn to the United States.
Interesting. We'll come back in a moment and we'll take a look at what's going on in cattle and the hog market as well, right after this. Well, again, I want to recap the outside markets before we get into this livestock talk, just to make sure we touch on them here on Election Day. What's the Dow doing? Let's take a look. On the Dow Jones Industrial Average Futures, December up 314 points at 33,152. What's the U.S. dollar index doing? It is down 533 points on December. We're at 109.460 right now. Crude oil trade, West Texas Intermediate crude, we have December, wow, down $2.48 now at 89.31. Wow, it's doing a swan dive off of that earlier high of over $92 this morning. The diesel fuel futures, we were looking at that earlier this morning. After being over 10 cents higher at one point, now it's actually 0.3 of a point lower, or 0.3 of a cent lower at 377.8 on December futures. Meanwhile, on the livestock sector, we have had a cattle market on the minus side all day, but look at this, December, 7 cents higher all by itself. We're at 153.12, February down 25 at 154.77. Over on the feeder cattle side of things, we have the November down 15, January down 17, so still very quiet trade there. And on lean hogs, we have December down $1.50 at 85.55, February 75 lower. Kind of the status quo there. So, Brian, everything quiet on the livestock front, not much to talk about apparently today.
Yeah, it's pretty quiet. The cattle show lists were assessed a couple thousand heads smaller than last week, around 233,000 heads. So, the tightening of the show list is certainly bodes well for the cash markets this week. The key will be is how aggressive the packers want to be in their weekly kills. It was a big kill last week. This week, it looks like we're starting off the week on a Monday kill, a little bit softer, a little bit slower, a few thousand heads smaller. So that's something to keep an eye on as, if we start to kill less cattle, it'll help prop up the boxes and help the packer margins, but it means that they need a little bit less cattle, and that could hurt our cash trade this week. So I think that's why we're seeing calls of just fully steady for the week instead of higher prices.
And we can't forget that winter storm out there brewing in the Northwest, too. Brian, thanks for all the help. I appreciate it. Brian Hoops, Midwest Market Solutions. Janet, back to you.